Hi, it's Joe Rabo again. So I wanted to follow up on the last video where we were talking about the two time frame uh, trade using a weekly and a daily. In the last video, I used U.S. Steel, but it's the same period of time, but I'm gonna use Alcoa in this example. Um, very similar. If you look at the higher time frame, 18 below the 40, a comfortable distance between them. This got a little nuts here, but for the most part, they have a fairly parallel looking downtrend. But on this video, I want to spend the majority of the time focusing on the lower time frame entry and refining the entry and what to look for. So I'm going to focus. I've made this little spot here. This is the area I want to focus my efforts on. I mean, once the 18 and the 40 rolled over on the weekly, there were a couple different chances on the short side where you got rallies to the 18. I just wanted to focus on this because the lower time frame gives a few important examples of what to look for. Some detail that I think is important to recognize. So let's just take a little closer look here. So we have the down move. It starts to rally up. And what we're looking for on this time frame is the opposing trend, right? You want to have an 18 above the 40. Sometimes they're rising. The 18 will almost always be rising, but the 40 may be flat. It could possibly be declining, but most of the time it's flat. It might have a little slope to it to the upside. We actually don't want it to be too strong. If the 40 is too strong, that's sort of representative of a reversal pattern and even maybe something that could have continuation to the upside. In the example on U.S. Steel, it did have a rising 40, but the violence to the downside was counteracting and caused the signal. In this case, we don't really have that situation. This is not a real powerful rally. But one of the things I want to make sure you're looking for is once the 18 crosses the 40, we're looking for a period where the price will come, usually happens pretty quick, sometimes not as quick, but where you come inside the zone between the 18 and the 40. So this little poke through here where price got inside this zone between the 18 and 40 and then makes an attempt to try and break out and start trending to the upside. In this case, it did get to a new high, but look, by the end of the day, it gave it all back. So what we're on the lookout for is a move inside the zone and then basically failure. Sometimes it makes a lower high. It won't even take out this prior peak. And other times it'll do what this did, where it'll go to a new high, but it can't hold. It just fails quickly. And when that happens, you'll be on the lookout for this break of the 40. When the lines are this close together, I tend to use the 40 as my trigger point. When there's a little separation between the 18 and the 40, and if you can draw a trend line off of these lows into the upside and the 18 coincides with the trend line, I might be looking at the 18 as the trigger point, and I'll use future videos. I'll show you in future videos some examples of that. But right now, I think the main point of this video and what I wanted to show to you is you're looking for the crossover and then a inside the zone and then an attempt to move up. If you have that, and then a failure, the odds are really in your favor that you're going to start to see this trend get back in line with the higher time frame trend. So again, that is the goal of what we're looking to do. We're trying to use the lower time frame to get us back in line with the higher time frame trend. And if sometimes you get early warning signs. So I haven't gotten into momentum indicators yet. I'm just gonna give you a real brief taste of how this could be used, though. This indicator at the bottom is the MACD 310 oscillator. Linda Raschke has used this for years. If you go online, you can read all about this and how she's used it. But the bottom line is it's very similar to MACD, but it's a faster oscillator. It's using shorter term numbers. And this black line is essentially the fast of the two lines. This green line is the slower moving average of the fast line. So I don't want to get in too much detail on this, but what I do want to point out is as this is making higher highs and higher lows, and especially this after it's come into the zone and come out of the zone, we're looking for a point where this peak is lower than this peak. So that would be a bearish momentum divergence potentially. As this tries to make a new high here, it can't do it. And when it comes back down, I think you could actually be even more aggressive in this scenario where, you know, the MACD line starts to turn down. You might not even have to wait for the 40 to break because this momentum, these momentum characteristics are confirming that this is a very weak trend and it's probably starting to reverse back to the downside. Again, I don't want to confuse matters, but I did want to point this out. I'm not giving enough detail on this indicator or momentum or divergence or anything like that yet. But I just want you to understand there's a lot of detail that goes into refining your entry point. It's not going to be the same trigger every time. You can't look at it and say, okay, I'm going to short it when it breaks the 40. It just won't work. You've got to look at the characteristics of the move. You've got to look at the trend of the move, and you got to look at, you know, the quality of the rally to determine how aggressive you want to be on the short side. Because you got to realize I'm showing you a couple of examples that just got pummeled after you got in. But a lot of times the move might only make 2 to 3 bars in your favor and then turn back around. So the quality of the entry point is going to be a huge factor in your win ratio. We want lots of wins in here. You're going to have lots of small wins and lots of small losses, and then the occasional monster move. So you're going to have to adapt to that and get used to it. But that's the part of that's just part of playing this game. There's no way of knowing which ones are going to do this every single time. You're going to take, you know, small nicks, and you got to be very, very disciplined about your stops and making sure you're getting out of the way if this thing turns on a dime. So anyway, those are, you know, more future video concepts. But the main point here is looking for opposing trend going counter to this. 18 crosses above the 40, comes in the zone, but then has no strength afterwards. So that's I think going to be key to finding and helping you to refine what to look for, and at least in the price action.